Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. So in this video, I'm going to talk about something that is quite important. It's not exactly crypto, but it affects crypto, and that is the Dow Jones Industrial Average and the 10-year yield. Folks, in this video, I'm going to make the case that this year, 2024, is America's 1929 moment. Now, what am I talking about? Well, if you go back all the way to the early part of the Dow Jones Industrial Average chart, you will see a crash, a massive crash that took place, and the peak was in 1929. So that is a very bold statement to make, that 2024 is America's 1929 moment. So here we are back at today's chart. So in this video, I'm going to show you why I believe this to be the case. So to start off with, let's zoom out and get a bigger picture of the Dow Jones Industrial Average. Okay, so here we are zoomed out on a bigger picture. This is a week candle, so you can kind of see a much larger bird's eye view of the Dow Jones. If we were to take this area right here, this run up to this crash. Now, this crash took place during C19. If we were to copy this and paste it over here, it would look something like this. So I took this structure here and I matched it to today's timing, height, and depth. As you can see, it is what the Dow Jones is doing. Now, why did I match it to today's timing, height, and depth? Well, the reason for that is when a fractal repeats, the basic idea of the pattern copies over, but the timing, height, and depth, those remain original to the new structure. So what that means is you can have a smaller structure repeat on a larger time frame, or vice versa, the larger structure repeat on a smaller time frame. You can also have parts of a structure that may be larger than what the original fractal suggested. So while the main concept is being repeated, it will look original every single time it repeats due to the timing, height, and depth being unique. As you can see, we are getting near the peak. Now, eventually, if this continues to follow, we're going to reach the peak, and we should expect something similar to this. But this is not the only fractal that is at play here on the Dow Jones. There is a much larger structure at play, and I'm going to show you that. Okay, so if we go back all the way to the very beginning of the Dow Jones Industrial Average, this chart starts in 1896, and it goes to present. If we were to take this part of the structure, this run up to the 1929 peak, and copy it over here onto this side of the chart, it would look something like this. Now, once again, I took this fractal and matched it to the timing, height, and depth on this part of the chart. But as you can see, while it is a much, much larger structure at play, it is doing what it should. In other words, it moves up at the right time. It has its consolidations at the right time. The sequence of events, even though they're playing out on a much larger time frame, are in step with the run-up to the 1929 peak. So we go through history. Now, this is on a month candle, so this is a monster of a fractal. This is one of the larger fractals that I know of. Now, we are not at the peak yet, but we are mighty close. So what I want to do next is I want to put the C19 fractal, this one right here, the run up to C19, and have this one on at the same time so you can kind of see how they both correlate to each other. Okay, so I have the C19 run-up copy and pasted along with the run-up to the 1929 peak. The more jagged one, the one that represents closer to what is happening, is the C19 one. The larger structure is the 1929 one. As you can see, they both tell the same story, starting with this area. So they're in sync with each other. This structure harmonizes with this larger structure. So where does that bring us? Well, we are currently at the blow off top, if you will. We have a bit more to go. Now, I don't know the timing, the height, or the depth of future moves. This is telling us that a similar structure to this is likely going to play out. Now, how it plays out, the timing of it, the height of it, the depth of it, that is yet to be seen. So if you are trying to look over here and make a connection, let me tell you, you are going to most likely be surprised, because just because it means we're going to move up, it doesn't mean we're going to go this high. It could go higher, it could go lower. I don't know. So do not use the price over here in conjunction with where this fractal has been drawn. If you want to try to figure out how high it can go, use Fibonacci retracements or something like that that is used for predicting how high price could potentially move up. So what I'm going to do next is I'm going to place the total chart, which is all of crypto, Bitcoin, Ethereum, all of crypto put together. And I'm going to show you how the total chart follows the Dow Jones. Okay, so on the chart above, I have the Dow Jones Industrial Average, and on the chart below, I have the total crypto market cap. This includes Bitcoin, Ethereum, and all the altcoins. As you can see, as price moves up, so does the crypto market. Now, there is some deviations here and there, but even then, this is really just an exaggerated pullback that happened here as well. And then as this declines, we see, again, a more exaggerated decline in the crypto market. And even this part right here, it's just basically mirroring what the Dow Jones is doing. And if we go further back, we can see the same commonalities. So as you can see, crypto follows the Dow Jones Industrial Average. Now, I don't know when this will come to a peak, but this is the beginning of 2024. I'm on a day candle. This could play out much longer than I have here, but it's a small amount left. So I see this potentially most likely taking place in 2024. Now I want to switch gears and jump into the 10-year yield. Okay, so here's the 10-year yield. Now this is a very zoomed out picture. It's on a month candle. And I've talked about in previous videos about this peak right here being copied over here. And it is, but there's more to the story that you need to hear. Okay, so what I'd like to do next is I'd like to examine the macro structure of the 10-year yield. So it's very difficult to see what is going on over here. So what I'm going to do to make it more visible is I'm going to copy this right here, this fractal. Now you can get a better view of what's happening over here. So let's zoom in on this point right here. Okay, so this chart begins in 1912 and it goes to present. And as you can see, I've broken this chart up into separate boxes. So this first box went from 1912 to 1920, the second box from 1920 to 1928, so on and so forth. Okay, so what I'd like to do next is I'd like to take this part of the chart and copy and paste it over here. So in other words, from 1912 to 1941, I'd like to take each of these structures, so this first box from 1912 to 1920, I'd like to copy and paste it over here. I'd like to take the 1920 to 1928, copy and paste it over here, so on and so forth. All right, so I have the fractal pasted on, and as you can see, right off the bat, price starts low, and it moves up to a peak. So this blue line is the copied version from 1912 to 1920. So there are some differences, but the overall idea is being repeated. Okay, so moving along, I took the fractal from 1920 to 1928, where it started off at the peak right here, and it declined to a low point. Well, this is what took place between 1981 and 2020. It took many, many years for this to play out. Now, as we continue to move along, this part right here was the original structure from 1928 to 1931. And in 2020 to present, this is what we are doing. So as you can see, price moves up just like it should, and we are currently working on a peak here in 2024. It even has this little wave right here that the fractal shows. We see it here. We see this here. So this structure that we are currently working on was taken from over here. This is 1928 to 1931. And as we can see, the top of this takes place in 1929, just like we see today. So this brings up a question. The Dow Jones has not peaked yet, but we see a peak playing out in the 10-year yield. Let me focus on this peak real quick. Okay, so here we are zoomed in. Now this is adjusted to be slightly different because I believe that there is a possibility the 10-year yield could potentially move back up. This could potentially be like this. That's the way we just saw it, where this peak right here is this peak right here. There's another way to interpret it, and it's like this. So we have the peak. This, for the most part, goes flat. We see a nice flat bottom here. Then price begins to move up, and then it declines. Now, it is possible that price moves back up and comes to a peak in the same time that the Dow Jones also comes to a peak. Okay, so on the bottom here, I have the 10-year yield, and above here, I have the Dow Jones. So as you can see, this peak that we are currently at took place in 1929, and it came to a high point right here, right at the very peak of the 1929 peak. So we could potentially see history repeating again where it moves up and comes to another peak over here. I don't know how high this would go or how long it would take to form, but eventually it would come to a peak at the same time, potentially, the Dow Jones is also coming to its peak. The most interesting thing and the most important thing about this video is that there is an amazing correlation between the 10-year yield, what the 10-year yield did in 1929, and what the Dow Jones did in 1929 to what is taking place today in the Dow Jones following that same structure, and what the 10-year yield is doing following its same structure, with the Dow Jones coming to its peak in most likely 2024, as well as the 10-year yield peaking already or potentially coming to its peak as well in 2024. This is strange, people, how this is playing out. This is the first time I've ever seen anything like this. Okay, so if we took the 1929 crash from the peak to the trough, that measured roughly an 89.51% decline. It was a fast and furious drop. So far, we've followed everything else very closely. It would be unrealistic to believe that now, all of a sudden, it's going to change. The timing, the height, and the depth will make it unique, the new version, but we should not expect something to go further up and then sideways and then decline and then go up again. This is what history tells us happens. Let's jump over to today's Dow Jones. So if this is the peak, which it could not be, it could be higher, it could be lower, and we did experience an 89.51% drop. I'm not saying that we will. All I'm doing is taking the past decline and copy and pasting it over here. This is the Dow Jones decline. This is what it would look like. Now, it could be less than this. It could be more than this. I don't know. It could take longer to play out than this. It could take shorter to play out than this. I don't know. But what I do know is that we have followed this structure very closely. We are now almost at the peak, and this is what comes next, according to that same structure. Now, let's throw on the decline of the C19 one and compare it to the 1929 one. So here in gray is the C19 crash, and if you were to stretch this out, they both really are saying the same thing. It's the same crash taking place, folks. So this underscores the idea that with this type of structure comes this type of decline. Let's jump over to the 10-year yield and examine what comes after this peak. Okay, so here we are on a very zoomed out picture. Now, as you see, I have two separate fractals here. And the reason why I have that is if this followed this same path, price would go below zero. Now, I don't know if that will happen. So I adjusted this, and I could be off on my adjustments of it not going below zero. So it would decline and then move up. Let's zoom in here and examine this a little closer. So here we are today. Now, it could go up higher, again, make that other peak, or it could do this. Eventually, it's going to decline, come to a low, and then the 10-year yield is going to rise up again. I don't know when this will take place, how high it will go, but it will come to a peak, and then eventually decline. Now, I have this decline somewhere close to where zero is zero. I don't know where it'll go to, but I think this is not really valid. I don't know if something can go below zero. Maybe you guys can tell me in the comments. Anyways, this could play out in a very long time frame. I'm not sure. It could play out shorter. Timing, height, and depth, they're always going to be original every time the structure repeats. So we'll have to see how all this plays out, but eventually it would move back up and repeat the cycle all over again. So folks, whether it moves up from here and does another peak or it just continues to decline, we eventually will have a drastic decline. Back when this decline took place for the first time, it moves up while the Dow continues to fall. So that could be a situation that takes place as well. So this is the Dow Jones back at today's chart. I've made many videos saying that the Dow Jones was going to make a new all-time high. We see that that has finally taken place. Now, sometimes these charts can throw you curveballs. Sometimes the declines can take longer to play out, or the moves up. Sometimes they can be shorter than you would think. So expect curveballs. I don't expect to have it all laid out perfectly, the future movements, but I am confident that the overall basic structure is likely going to play out just as it has done for the past 90 years. So to conclude, I've shown you in this video how the Dow Jones Industrial Average is following a fractal that began in 1932. This structure is the run-up from the very beginning of the Dow Jones chart to the 1929 peak. We are currently almost at that peak. Furthermore, this structure is buttressed by the C19 fractal, which says the same thing. I also showed you how the crypto market follows the Dow Jones. Meanwhile, the 10-year yield, which has been repeating its macro structure since 1941 and is now at the peak that was formed in 1929. These fractals are large fractals. The 10-year yield has taken over 80 years. The Dow Jones has taken over 90 years. 2024 is 1929 revisited, folks. These charts are telling us an important message that a major correction is likely to take place in 2024. This is one of my important messages for 2024. We're not there yet. In the crypto market, things look promising. In other markets, you might see warning signs. I am not a bear. I am not a doom and gloomer. I do my best to reflect what I see in the charts, and it's not that I'm looking for bearish activity. I just see what's coming, and I'm trying to do my best to let others know. Well, I hope you found this video interesting. If you did, it'd be much appreciated if you hit that thumbs up button. This is not financial advice. I'm not a financial advisor. But if you did enjoy this type of technical analysis and you'd like to see more of it and you're not a subscriber, I recommend hitting that subscribe button. I'll continue to follow these charts as they develop. To be forewarned is to be forearmed. So even though we have turbulent times ahead likely, that doesn't mean that we need to fear or be panicked. Opportunity will present itself even in these situations. So just because we are going into a rough patch ahead, that doesn't necessarily mean that you can't prosper in it. Well, I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.